Good afternoon. How is everyone doing today? Thank you for attending the session. Hi, Kelvin. If you can see me okay, can hear me alright, put it into the chat, let me know. And while we give it a couple of minutes before we get started, do click on that like button. It helps with the YouTube algorithm a whole bunch. Fantastic. Thanks for that, Kelvin. Hope you're well. I'm doing very well. Trading well, I hope. If you're new to the session, drop a message, say hi, let me know where you're joining me from. I'd love to find out. And if you're regular, drop a message and say hi. Hey, Suki. You're a regular? Well, I got all regulars here now. Did you guys trade well during the non-farm payrolls? Well, the central bank and the non-farm payroll releases? Hey, Simon. How was your holiday? Good to see you back. Good morning. Today we are here with IC Markets on a webinar doing a live market analysis, highlighting for you key levels that we could be looking towards this week, especially after that big volatility that we saw through the end of last week. Suki, it's okay, it's okay. As always today, there's always tomorrow. Always a better chance to make it. Always a chance to make it better again. Do let me know if there's any way I can try and help you with that process. Couple of minutes before we get started, and while you're waiting, do help me out. Click that like button. Hey Kanamba, how you doing? Haven't seen you for a while, so good to see you back. Hey BL, hope you're well. Hey No Mawele from South Africa, good to see you at the session. Alright, one more minute and we shall get started. Live market analysis today. Quite a number of news we've had, so I'll do a review of what we saw last week, and then after that I'll look into what could happen with the week ahead, identifying for you some key levels that we could see possibly get reached quite quickly. In the meantime, help me out. Click that like button. Only half of you have done that so far, so make sure you do it. I'm very good, Kanamba. Been trading well, seeing good results, super happy. Is the stream freezing for anyone? All good? Kelvin, let me know. Someone let me know. And then we shall get started. Okay. Suki, maybe try restarting, quitting out, joining back again. We'll be here. Okay, let's get started. Hey Stanford, how are you doing? Alrighty, fantastic. Okay, let's get started. A lot of things to get through today. Again, welcome everyone. Thank you all for attending the session nice and early, especially for the regulars. Good to see you again. Hey Fabio, how are you doing? All right. Today we are here with the IC Markets webinar doing a live market analysis. Basically what we'll be doing is we'll be looking at what happened over the last week, right? Previous week. A lot of news happened over the previous week, so I'll guide you through that. We'll talk about how it moved prices quite significantly, especially on Thursday and Friday. And then after that, I'll look into what could happen with the week ahead, identifying for you some key levels with which we might see some reactions of the price. But as usual, before we get started, any information contained in this webinar should not be construed as advice and is presented as educational material only. International Capital Markets has not considered your objectives, financial situation, and needs, and you should consider its appropriateness for your circumstances. The contents of this webinar and any accompanying material are not intended to be a solicitation of funds or a recommendation to trade a financial product. What it means, and you all know the drill, is that I will be looking at several different charts, several different possible trade setups as well. Those will be my views of how I think the market could move and could move towards. If you do jump into any trades, please make sure you do your own due diligence. Make sure you check that the setup fits with your own trading strategy, your own trading methodology. And also, I do tend to look at many different trade setups. If you do jump into the trades, please make sure you're not over trading, not over leveraged. All right, if you jump into every trade, I'm pretty sure you will be over trading, over leveraged. So just make sure you check that, be more selective, and do your own due diligence on that. Okay, and as usual, please, I have the chat open on the side here. Ask a question. If you have any questions at any point in time, ask the question in the chat. I'm watching that. If you have any particular pairs that you would like me to go through, I'll be happy to do that for you guys as well. Alrighty, you all know the drill. Introducing your host, myself. My name is Jin Dao. Most of you know me as Jin or JD. I'm an investment analyst here at the Everest Fortune Group, award-winning research team, technical analyst finalist award for best FX and equity research 2019, 2020, and 2021. I'm also previously managed a multi-million-dollar FX fund, have been trading for a long time now already, so I'll be happy to share with you my own trading experience. If I can guide you through your own trading journey, I'll be more than happy to do that. Okay, just reach out and let me know. So let's get down to it. What has happened over the past week? All right, so I'll just show you since Monday to now, Monday last week to now. I'll gloss through over the first couple of days because there's not much that happened. On Tuesday last week, we saw GDP numbers for the Canadians came out at 0.1%. Not a big change. Didn't see too much happening on the CAD dollar at that point. On Wednesday, early Wednesday morning, we had the New Zealand with the employment numbers, disappointing markets. Okay, slightly unemployment rate rising from 3.3% to a 3.4%. Employment change quarter on quarter dropping from a 1.3 to a 0.2%. Right, so dropping there. We actually saw some downside on the Kiwi dollar, but it was quite brief. We saw it drop a bit before bouncing back up again. All those news saw very little price volatility because it was all setting up for the big news event, right? It was all setting up for the big news event. Firstly, being the Euro CPI data was 9.2, expected 9.0, came out 8.5. Again, saw some price volatility, but not long-term trend changing kind of volatility. Where it all started was Thursday morning, 3 a.m. GMT plus 8. Hey Tariq, how you doing? We saw the US federal funds rate, Fed funds rate for the US go from a 4.5 to a 4.75%, a 25 basis point rate hike from the Federal Reserve, from the US Federal Reserve. Okay, I'll show it to you here on the charts. On Thursday, 2nd of February, 3 a.m. So the H1 time frame on Thursday on the 2nd of Feb at 3 a.m. Right? And you can see here, as the news got released, right, despite a 25 basis point rate hike, despite the Fed Reserve not commenting about slowing down or cutting interest rates. In fact, during the press conference, Chair Powell was quite hawkish. He was saying that a rate cut in 2023 is unlikely, and they would only adjust policy based on strong data. Okay, we actually saw, despite all that hawkishness, we saw the dollar index go from that 101.76 or 101.80 level within the hour straight down towards 101 about dot 20. Okay, that continued on slightly, and then on Thursday morning at 8 a.m. we saw the dollar test that 100.85 as low as 100.81 level before bouncing back up again. Why did it drop? Right? So why did the dollar index trade towards the downside from that news release? Is because although it was hawkish press conference from Chair Powell, although it's a 25 basis point rate hike, it is a slowdown, right? Previously, you can see here, they were hiking rates at 50 basis points. Anticipated that's already a 25 basis point rate hike, but it is a slowdown in a rate hike. That's why we saw it drop. Although they have not said that they're going to stop or slow down further, less than 25 basis point, we saw the dollar index drop because they expected the Fed Reserve to be a lot more hawkish. So it's just viewed that they were hawkish, but not hawkish enough. And that's why we actually saw the dollar index drop from that 101.80 level down towards 100.8, almost 100.80. Okay, so a question here is, are we really at the tail end of the rate hike? I would say that we might not be at the tail end of the rate hike. So what I mean by that is I think that we might still see interest rate increases coming from the Fed Reserve. They have actually said that, right? So coming back to the press conference, headlines during the press conference, they mentioned that according to current outlook, it will not be appropriate for rate cuts this year. There will not be a light switch moment where we know inflation is turning. Do not see this as a time to pause. Policymakers do not see this as a time to pause. And to answer BL's question of, is this a tail end? I think this headline here where it says, we have not made a decision yet on a terminal rate, right? And also we are not yet at sufficiently restrictive levels. All that put together, I think that we might still see further rate hikes, but it might just be a bit slower. They might spread it out over the year, or they might, increase it at 25 at the next time and then slow it down. So I still think we'll see rate hikes. Definitely should see it slowing down, but I don't think we will see it stop, or definitely not see it cut within this year. All right. Good question there, and happy to answer that quite quickly there for you, BL. You're most welcome. Hey, Jamilu, how are you doing? All right, so that was the Fed Reserve with their press conference and interest rate decision early Thursday morning. All right, I was trading, so over the Thursday and Friday, I just had a couple of hours sleep spread across because I was trading that news all the way through to the morning. Following on from that, what we actually saw was on Thursday as well, evening, 8 p.m. GMT plus 8, the Bank of England with their interest rate increase from a 3.5 to a 4%, a 50 basis point rate hike. 50 basis point rate hike from the Bank of England. And now put it into the chat. Do you know what happened to the pound dollar? With a 50 basis point rate hike from the Bank of England, did the pound dollar, did the GBP USD rise up, or did it drop? Put in the chat, let me know. I just want to see if you guys were trading that news event. Alright, BL quickly with the correct answer. It dropped. Right? So again, now jumping to the pound dollar. you see here on Thursday at here we are at 8 p.m. GMT plus 8. What we actually saw was a brief push towards the upside, right? So you actually went up within the hour, tested that 1.2391 or 1.24 level. It rose up briefly before trading back down again. I'll show it to you on the M15 time frame here. Where is it? Okay, there we go. So this was at 8 when the news got released. Okay, so line just before it shot up before trading lower again. Okay, so why? Hey Tom, how are you doing? Good morning. Okay, so why did it drop? Why did it drop towards the downside despite a 50 basis point rate hike? Okay, mainly is because at 8:30 during the press conference, yeah, again, remember, look here, it was a surprise from the source. It was not scheduled. It was not scheduled. It was a surprise press conference where the Bank of England, or rather Governor Bailey from the Bank of England, came out and spoke and indicated that we are seeing the first signs that inflation has turned the corner. Right? They're anticipating that inflation has turned the corner, or signaling that inflation has turned the corner. We might see inflation drop for the UK, and then hints at a tightening cycle nearing its end. Right? Hints at tightening cycle nearing its end, meaning that the Bank of England, Governor Bailey, hints that interest rate increases is nearing its end. At 4%, I think it is at a 10-year high, if I'm not wrong. A multi-year high at this point, hinting that they might slow down or stop further interest rate increases. So it's because of these two headlines that we saw the pound dollar trade lower. Right, we saw it trade lower and then continued down further. Okay, so sometimes it's really, not that first reaction that we were looking for. Not that first reaction, 50 basis point rate hike, we saw that push towards upside, but the indication that we're looking at a slowdown or pause in future interest rates, not as hawkish as expected, or not hawkish at all. We saw that pound dollar push towards the downside, and very importantly, breaking below that 1.23 level, right? If I drew this line right across, you can see that 1.23 has held quite strong over the near term, right? And now that it's broken that 1.23, we saw that big downside move. Okay, Lucia, I do see your question about the pound CHF. I'll get to that shortly. And then after 8:30, with the Bank of England with the interest rate increase, at 9:15 the euro, the ECB, with their 50 basis point rate hike, taking interest rates for the eurozone from a 2.5% to a 3%. Again, a 50 basis point rate hike, and as you know it, coming back to the euro dollar here, right as the news got released on Thursday at 9 p.m., we saw a big downward shift on the euro dollar, very importantly reversing strongly from that 1.103, almost 1.3030 level, right? So reversing strongly towards the downside. Why do they mix messages like that? It's not really a mixed message. It used to be a lot worse. They used to say, I know Mario Draghi used to say, like, we'll do anything and everything required when it's needed, right? So that's even more of a mixed message. At least this time seems a little bit more straightforward. Okay, it's actually more what we're facing now, I believe, is more that markets are over anticipating what central bankers are going to do, and over anticipating in terms of pricing in the decision. Okay, and that's why we actually saw this happen on the euro dollar. See, the euro dollar, in terms of the interest rate decision, 50 basis point rate hike, we know that already. They have signaled that since the last meeting in December. In December, President Lagarde came out and said, we will be increasing rates 50 basis points at the next meeting and at the subsequent meeting. So that was priced in, that was pretty much expected already. And then when the news got released, we actually saw the euro dollar, because it was priced in, we saw it sell down, right? One candle to the side, we saw it. Small upward move, then we saw it sell towards the downside. But the big move at that point was at about that 10 p.m. time, where it was the ECB press conference. This a little bit surprising because she was very hawkish, right? Indicating that don't doubt our determination to achieve 2% inflation, significant hikes needed, anticipate that growth will remain weak. Okay, but what you can see here, what you should put together here, is that she's saying the same thing. She's saying the same thing as what she said in December. The only difference at this point is what happened earlier. Right, what happened earlier on Thursday morning, where the Fed Reserve came out very hawkish. Right, possibly not hawkish enough, but came out very hawkish. So when you consider the ECB saying the same thing as before, and the Fed Reserve now being more hawkish, that's one reason why we saw the euro dollar trade significantly towards the downside. Makes sense so far in terms of what happened on the Fed Reserve with the interest rate increase of 25 basis points, the Bank of England with their 25 basis points, and a change of tone coming from the governor, and also the ECB with their 50 basis point rate hike, with saying the same thing, no change of tones. All good, let me know. Not deeper recession at first thought. Yeah, it looks like it's not going to, looks like we might be able to side skirt a recession, but I do think on technical basis we might still see a recession, but on the overall feel of it, in terms of employment data, in terms of the numbers, possibly not going to see that recession. All right, hawkish meaning that the Fed Reserve came out and they were quite positive. You know, he was talking about no rate cuts into 2023, looking at possibly going to maintain or no decision on terminal rates, so signaling that it could even go higher. Those are hawkish views. All right. So you would think that after Thursday, it's all good. The euro dollar through to Friday morning traded at that just above that 108 or 10, just below that 109 level. Right, it bounced up. We thought could see a recovery right across the board after all that fluctuations. But what happened on Friday? I can tell you that you guys know I was trading onto gold on my funded account, on my funded trader account. I was focusing trading on gold towards the downside, and then on Friday I said, okay, great, I'm done. I hit about 2.5%, if I'm not wrong, for the week, and I was ready to just call it the end of the week. Even with the non-farm payrolls ahead, right? I didn't think it was going to be a big price movement at that point. So now, what happened onto Friday was the non-farm payrolls. And look at that non-farm payroll. Right? I think I told you guys this last week when I didn't expect this to be a big price mover. I thought that non-farm payrolls, or anticipated that non-farm payrolls would come out at about the 200 range. Big surprise, huge surprise, came out at a 517K. Expected 193. Previous was 223, got revised up to 260. Caught markets by surprise, by absolute surprise. Unemployment rate went from 3.5. They expected a small climb. It was a small drop instead to a 3.4%. What happened? Right across the board, we saw the big news event. Dollar strength came straight into play, surged towards the upside. Gold went from 1915 pretty much straight down towards the 1862 level. Right? Big drop on gold. And Suki's asking on the euro, it went from that 1.0940 level straight down past the 1.08, now currently trading at 1.0770. Okay, so big downside on the right across the board, because what we saw was that dollar strength, right? Dollars on the news release from 101.60 straight up and pushing higher now, breaching that 103.25 level. We're going to see possibly further upside. So in terms of key levels, where do I think it could be heading? Let's look at H4 time frame. In terms of the dollar index, it is right at that range. First level it has to break beyond is 103.45. Right, you can see that it's on the way. It's not far away, but it needs to break above 103.45. If it does that strongly, then obviously we have a 105.50 or 105.60 level, quite significant high, a swing high there, but I think there is a bit of a hesitation level here at 104.50. Okay, so a couple of levels there in terms of the resistance levels for the dollar index or the DXY. Oops. What am I doing here? In terms of the DXY. So few key levels that it needs to break through before we're going to see a big upside move. I'll tell you that I'm possibly looking at it getting towards 104.50, but I don't see it having a big sustained move. I think we could see it test and then turn back down again. Let's wait for it. There are a lot of other news for the rest of the month to be released. Hey Imad, how you doing? Okay, so that's the dollar index. We're anticipating that push towards upside. In terms of the euro, with where we think it could get to in terms of a resistance level, I wouldn't say that 109.40 is a 109.40 is a resistance level, or rather it is, but it's not the immediate resistance level. All right, Suki, I would say that a resistance level would be at about this point here, 108. 108 as a nice round number resistance level. It's rejected, it's turning down from this point. I would say that I would like that as a resistance level first off. Make sense? And given that it's broken past 108, looking like it's going to push towards the downside, zooming out, I think that we could see it come down towards that 107.10 level as a good support level. Okay, very close. It's not very far away. So if it does break past 107.10, we know that a big swing low is at 105, but that's a bit of a distance away. I don't think we'll get there in a hurry. We do have a bit of a interim level here at about almost at 106 level. So it does look like we're just going from round number to round number in terms of the euro dollar at this point. Alrighty. Hope it makes sense to you all. So that was my resistance there. Good stuff. Fantastic. Okay. So, what else? Okay. With that said, now looking at the news ahead, I thought it would be a point in place where price has been hit multiple times. It looks like all of those are levels. Okay, it has hit, right? So those are the point in place where price has hit. It doesn't have. For me, I don't look at where it's hit multiple times. I look at support resistance levels at a point where it's hit and reversed, right? More like a V shape. So I like to look for those turning points, right? Turning points as levels that we're going to identify that are key. So those V-shaped levels. So it's tried to go up, failed to go higher, turn back down. I'll identify that as a key level. Okay. Then with that, you can see for this week ahead, what to pay attention for this week ahead. Today, not much happening today in terms of the news events, but watch out tomorrow, 7th of Feb, 11:30 a.m. GMT +8, interest rate decision from the RBA. 3.1% expected to go a 25 basis point rate hike to a 3.5%. Right? 25 basis point rate hike to come from the RBA. Now, what do you all think will happen to the Aussie dollar? What is going to happen to the Aussie dollar on Tuesday with the interest rate decision? Anyone want to have a guess? Aussie dollar right now trading at that 0.6895 or just below that 0.69 level. We do have a key support level at about 6870. Jamilo says drop. Kevin says go bull. Suki with based on the euro and pound, it seems like it's going to go down. All right, we have it trading right at very close to that overlap support and resistance level. What do you think is going to happen? I'll show you here. I'm not sure if I can bring it up quickly. Let me just see. Aussie dollar. Okay. This is something I did quite a long time ago. This was back in September last year. That's quite interesting that every time 7th of June last year, we saw a 50 basis point rate hike from the RBA. Saw some upward move, but overall went towards the downside. 5th of July, 50 basis point rate hike, pushed down. 2nd of August, 50 basis point rate hike, pushed down again. Right, so what you should anticipate here is that it seems like the RBA is very good at forward guidance in terms of indicating where they see prices or where they see interest rate increases or signaling interest rate increases. And over the last couple of times, even if you plotted this out, every time there was a rate hike, we saw the Aussie dollar drop. Right, we saw the Aussie dollar drop. So what I'm anticipating now with the interest rate decision due tomorrow is if the Aussie dollar does trade below or around this 0.6870 level, right? So if it does over the today now to tomorrow calm down and trade within this range, I'll be looking for further downside potential. Where could it get to? I think it would be a bit too optimistic to expect it to get to 0.6650. Big downward move. If you did that trade, it would be about about a 50 pip stop loss. There'd be almost a 200 pip take profit, or 1:4 risk reward ratio towards the downside. A little bit too optimistic. Aussie dollar does not usually have that big a move with the interest rate decision. Okay, but I think that between this 6870 level and this 6640 level, we do have a couple of key levels to pay attention to, right? And you would have one at about in the middle here, so about 6770, right? 6770 in terms of the interim level. Could even be looking at about 67, I would say about 6745, previous swing low from this near-term support level. Okay, so I would actually be looking for a possible 1:2 towards the downside. There you go, Suki. I just thought about that. So I'm just looking at that, possibly going to see the Aussie dollar trade towards the downside tomorrow with the RBA interest rate decision. If it does break below 6870, we could see it come down towards 6745, which would be about a 1:2 risk reward ratio towards the downside. Please, please, please remember, do your own due diligence before you jump into any trades. I'm not saying that it will definitely get there. I hope I can predict the market that way, but based on what happened previously, I'm looking at that possibility. All right, so do your own due diligence. Let's see if it's going to get to that point. And hey, if it does do that, ping me. Let me know. All right, let me know if you did jump into anything on the Aussie dollar with interest rate increase. I'll be happy to find out. Is there a maximum pip you should look at for stop loss and take profit? I don't actually look at maximum pip levels. I actually do always want to have it above my resistance level or below my support level, so always beyond the level as a stop loss, and then take profit always before my support or before my resistance as a take profit level. Okay, if you come to the point where you look at a trade that's looking like that, for example, you're going to risk 90, you're going to make that and it's not worth the trade, or even if you looked at a 1:1, where is it? A 1:1 at that point, I'm going to risk 70. If I make 70, I'm possibly not going to take that kind of trade as well. Okay, so I'll still look at that kind of levels. What about 1:2? Good fair trade for the downside. Makes sense so far? Hope you guys happy? Again, if you haven't already, make sure you click that like button. Especially if you like what I'm going through with you all right now, click the like button. It helps me out significantly in terms of the YouTube algorithm. And then we had Pound CHF from Lucia. Not a pair I usually look at, but let's see. Ooh, look at that. On the H4 time frame, it's tested. It's come very close towards at that 1.1110 level, 1.11 level. Seems like it's forming a bit of a support. Further downside could be limited to that 1.1050 level, right? So we might actually see a bit of a limited downside. This was in November last year. Okay, could see a bounce, but if this were to bounce back up, being the pound CHF, what we need to see is either the pound dollar strengthening, right? It's either the pound dollar strengthening or the CHF weakening quite significantly. Okay, I would say there's a chance that the pound dollar could strengthen, but it would be more likely if we saw the CHF weakening more significantly, right? Why so? Is because the USD CHF, as the dollar gets stronger, is going to drag the CHF up, right? And that could cause that relative weakening. But if it does go up, how high can it go? Just look at a bit of a fib levels here. Bring in a couple of levels. Definitely we can see a key level about 1.18 1269, which is that 50% level. If it does bounce back up, could you be looking for a buying opportunity? Take profit about 130, stop loss about 30 to 40, 1 to 3 risk to reward ratio towards upside, possibly. But I think that, remember, this is a counter trend trade. So if you're looking for that upward move, then do have the 23 and also that 38.2 level as a bit of a hesitation level. Right? What I mean by hesitation level is that if price does climb up, price does move towards upside like that, then you want to be thinking about closing out possibly some of your trade, partial close, or moving your stop loss up to protect on your trade. Okay, so that's the pound CHF. Hope I answered your question there, Lucia. Good stuff, good stuff. And BL with Aussie CAD. You guys are asking me, or the exotic ones I don't normally look at. Aussie CAD. Okay, hey, with the Aussie interest rate decision due tomorrow, anticipating that weakness on the Aussie dollar, or that downside, potential downside on the Aussie dollar, I would say that it's broken that, broken that previous swing low from mid-Jan, looking at further downside. It's interesting that we had that upward trend line there. I think that if we're going to see that Aussie dollar turn down tomorrow, then we could see this trade lower. Firstly, towards, I would say the key level, the next key level down will be 9156, right? 9156 with a bit of a hesitation at about 9210 or 9200, right? So again, could be looking at that continuation of the trend towards the downside, but hesitation level at 9200. I would say take profit at 9150. Could it go all the way down towards 9050? Possibly, but it looks like it might be a big push, a big ask for this to trade that significantly towards the downside. Right? For now, I think that we could see it fluctuate along this level for the interim. All right. Hope I answered your question there, BL. Pound dollar, further downside anticipated. I was thinking or anticipating whether we're going to see a bounce at this point, but it doesn't seem like it with the recent push back down. Key level at about that 1.20. Oh, not about. 1.20 as a nice round number is going to be a strong support. Right, Simon? If we do see it break below 1.20, then it's going to bring a whole bunch of downward movement with the 1.1860 level as the next key support. So I wouldn't do anything on pound right now. It's just too near to that support level. I'll be looking for it to break below that support level, and then possibly, about a 30-40 pip stop loss, 120 pip take profit, 1 to 3 risk reward ratio towards the downside, slight hesitation area at 1.1930. Alrighty, good. Is that good for you, Simon? With that, then looking at gold. Ali, I haven't done gold yet. We are looking at gold right now. Look at gold reversed strongly from that 1960 level, right? 1960 level, touched that and then went straight towards the downside. It broke through that 1900 level, almost as if it wasn't there, and then further big downside move, testing that 1860 level, right? Testing that 1861 level. All right. What I'll be looking for here at this point is if it could break towards the downside. For gold to trade towards the downside, it will need the dollar index to strengthen significantly, right? With the next key level here at about 1832. At 1832. How I look at it, I think that gold is likely to consolidate, right? Because of that small bounce, is likely to consolidate around this range before possibly breaking towards the downside if we see the DXY strengthen, right? Highly driven based on how the DXY performs. So this move lower is only going to be dependent on strengthening of the DXY. But for now, I think that is going to range between 1878 and 1861. Within this range, until we see a clear direction on the dollar index. Now it's retracing a little bit as we see gold bouncing up before we're going to see that downward move again. Alrighty. Hope I answered your questions there. AFC and Ali on gold. Kelvin on the NASDAQ. Oops. Well, if we see, you can see that it went up, it tested that 12,893 level. If we see the dollar index, that negative correlation it has with index with the dollar index, well, equities index and the dollar index, we're going to see further downside on the NASDAQ if the dollar index continues to strengthen towards the first level of 12,200. It does look like a big move towards the downside, but it has already reversed quite strongly from 12,893. I think we could see it come down to test. But why I was a bit hesitant is because you can also see that strong upward trend line, right? So I think it could come down and coincide at this point before turning back up again. So the trend line forming a good bit of a support, the previous swing high or the recent swing high forming a bit of a support as well, could test and bounce back up. If it does break towards the downside, then the next level would be at about that 11,800 level. Alright, Kelvin, that was the NASDAQ. Bitcoin, and then we'll do US yen, right? Unfortunately, Bitcoin, nothing too exciting here. Why I say that is because it has been within that range, right? It reversed down from almost at 24,000 level, now at 22,851. I think that we could see it test around this range, but it does need a bit of a break towards pushing up, right? So I think that it could bounce around this level, consolidate around this level before testing up. I think that it's going to stay within this range for the interim. Again, that push towards the upside is going to be most likely going to happen, but I'm just not too sure when. Do pay attention to that 24,000 level. I think once it breaks that resistance, we're going to see further upside on Bitcoin. Okay. If the NASDAQ goes up, does that mean the DXY could go down? It does. That's also why I was telling you guys that as much as I'm identifying the key levels here, I was saying that dollar index could come up to about this point and then turn back down again. Because apart from what was said during the central bank press conferences, nothing much has changed. So this is possibly all sentiment, right? Before we see it run out and then turn back down again. Now, even if we might be counting it too early, because it does need to break above that resistance level, which we saw in January. It held that level and turned back down. So is this going to hold? Does need to break above 103.44. Alrighty. And lucky last, where is my US yen? There it is. Alright, I'll share with you all something that I was just looking at on the US yen. Okay, we saw this push towards upside. We all know why it pushed up. This was because of the non-farm payrolls. What I'm looking at on the US yen is whether it could get to that 134.50 level. Right? Could it get to that 134.50 resistance level? Why key level there is because in December and early Jan, we saw it hit that level, test and reject. Thing you could be looking for is possibly towards upside and then look for that rejection back down. Again, like Suki had identified, we're all looking at some upward move on the dollar, but it does look like it's going to get to a key level before we see some reversals come back into play. So at this point, in terms of what to look out for, I would say if it breaks above 132.60, more specifically maybe 132.70, I would say possibly a long position up towards that 134.50, about 150 pips. Stop loss quite tight at about 50, a 1:3 risk reward ratio towards upside. Then I'll be looking for a potential, if it doesn't break above that point, then I'll be looking for potential reversal back down again. In this case, stop loss could be a little bit tighter, but at 50-40 pips, I would even try for a big move towards that support level at about 130. I know that there's a hesitation level of 132.70. Right, so looking at upside and later downside potential there on the US yen. Make sense so far? So I was telling all of you, we do get into a lot of different trade ideas, a lot of possible trade setups. So please be careful if you're going to be jumping into the trades. Please make sure you don't over trade, don't over leverage. How do I keep a record of all the trades I do in my MT4 trade history? In my MT4 trade history, or is that what you're asking? So wait, if I enter the trade on MT4, so it records it there. If you're talking about a trade idea, in terms of what I'm possibly looking at, I do spend a lot of time looking at the screen. I'm looking at the screen all day, every day. So I do tend to not to forget about what I'm looking at, what I'm identifying. All right. So I'm always scrolling through. No, I just use MT4. It just saves a lot of the work. I don't have to type up new stuff and all that. I have too many other things to do. Write analysis, do webinars for you all, trade, look for new trading ideas, long-term, short-term, different trade ideas all put together. So, better time spent leaving MT4 to record it rather than typing it all up on Excel again. Any further questions at this point? Oh wait, one more thing about the news. Do bear in mind on Wednesday we do have Fed Chair Powell, Governor McCallum from the BOC speaking. These are economic club. So I was saying that this one, usually not a big news event, but Chair Powell has had a habit of, talking about policy during the Economic Club of Washington events. So just be extra careful there. And then through the week on Thursday, monetary policy report hearings. Typically big price movers, but it's possibly going to be a bit subdued, I think, after what has happened. Friday GDP number was 0.1%, expected to be minus 0.3. More bad news potentially for the pound dollar, possibly more downside on the pound dollar. And then Canadian employment data on Friday, looking like it might be bad news, looking like we might see some weakness in the Canadian dollar, possibly. But all that's a little bit later into the week. We want to see what happens with the dollar index now after what has happened last week. That's going to form a good bias leading up into those few news events later into the week. Hey Pedro, no worries. This is recorded. It is on YouTube. You can always catch this again. And remember, guys, if you are watching this after the event, prices could have moved on already. Please make sure you check the charts. Please make sure you see that the idea is still relevant before you start trying to jump into any trades. All right. Risk management video is at 2%. So if you do 2 trades, that you mean you should risk 1%. Correct. One maximum exposure of 2%. Maximum exposure of 2%. So if you have 2 trades, 1% each. And you should come to a point where you identify or understand of how many trades do you normally have at a point in time. Right? So if you most of the time you have 2 trades open, then have 1% of risk management. If you do have 1 trade open most of the time, then you could set your stop loss to a 2%. Little explanation about actual and forecast that figures when news release. You're most welcome there, Suki. You are all the best. All of you, everyone attending the session is the best. Hey Jamilu, you're most welcome. Thank you, Simon. Chris, in terms of actual and forecast that requires when news release, I would say that you don't want to just focus on the actual and forecast. You want to look at it as an overall picture, because if you just focus on actual and forecast, you could get caught up, especially like cash rate, interest rate decision tomorrow. If it does come out at 3.35%, actual would be equal to forecast, which you might anticipate some upside move, but pay attention to the statement. So you just don't want to just look at the one data. You don't look at it whether it's a green or red number. Look at it as a whole. If you do have any questions, reach out. Let me know. I'll be happy to guide you through that as well. All right. Thank you, BL. You're most welcome there. Thank you all. And hey, if you haven't already, we are at 29 likes. Can you get me to 35? Those who haven't, get me to 35. Let's get to 35. Or 40 if you can. That'd be fantastic. We got 30. 10 more to go. With that said, oh, someone just unliked it. With that said, take care, trade well, trade safe, and I'll see you again. Bye-bye now.